Welcome back to Candlestick Signals for today's market, September 11th, 2025. Buckle up, investors, because we're in for a wild ride. The market is showing some serious volatility, with defensive sectors standing strong while tech and real estate take a hit. But here's the kicker. Small and mid-cap value stocks are outpacing their larger counterparts. Intrigued you should be. Let's dive into the candlestick signals that are painting a fascinating picture of today's market movements. Our first stop is the technology sector, which has been facing significant headwinds today. The sector experienced a decline of 3.2%, resulting in a market capitalization change of negative $42 billion. Large-cap software and hardware names were particularly affected, with bearish engulfing and hanging man patterns dominating the landscape. These bearish signals align with the ongoing rate pressure and overvaluation concerns in the tech space. For instance, at 2:15 p.m. Eastern Time, we saw a notable bearish engulfing pattern form on the hourly chart for a major cloud computing stock, signaling a potential continuation of the downtrend. Moving on to the energy sector, we're seeing a completely different story unfold. Mid and small cap energy stocks are showing impressive strength, with the sector posting a gain of 4.7% and a market capitalization increase of $31 billion. Bullish engulfing and hammer patterns are prevalent, reflecting deep undervaluation and the potential for a significant reversal. At 11:30 a.m., striking bullish engulfing pattern emerged on the 15-minute chart of a leading mid-cap oil exploration company, suggesting strong buying pressure and a possible trend reversal. Industrial sector is another area of interest today, particularly in the mid-cap space. The sector saw a moderate increase of 2.1%, translating to a market capitalization change of $18 billion. Multiple bullish hammer and doji clusters were observed in machinery and construction stocks, highlighting cyclical recovery potential. A notable bullish hammer formed at 1:45 p.m. on the 30-minute chart of a prominent construction equipment manufacturer, indicating a potential bottom and renewed buying interest. In the utilities sector, we're witnessing a different narrative. Despite its reputation for stability, the sector is showing signs of overextension. Utilities experienced a decline of 1.8%, with a market capitalization change of negative $15 billion. The highest frequency of hanging man and bearish engulfing patterns were observed, especially in large-cap regulated utilities. This reinforces overvaluation risks in what has been considered a safe haven. A clear bearish engulfing pattern formed at 10:45 a.m. on the hourly chart of a major electric utility company, suggesting a potential trend reversal and further downside. The healthcare sector presents an interesting mix of signals today. Overall, the sector saw a modest gain of 1.5%, resulting in a market capitalization increase of $22 billion. Bullish harami and engulfing patterns are particularly prevalent in medical devices and biotech midcaps, supporting continued accumulation in this undervalued, defensively oriented industry. A bullish harami pattern emerged on the 5-minute chart of a leading medical device manufacturer, indicating a potential pause in the downtrend and possible reversal. Shifting our focus to the communications sector, we're seeing some encouraging signs, especially among mid-cap names. The sector posted a gain of 2.3%, with a market capitalization change of $19 billion. Bullish harami and piercing patterns are dominating the landscape, suggesting accumulation by sophisticated buyers. A clear bullish piercing pattern formed at 12:15 p.m. on the hourly chart of a prominent mid-cap telecom services provider, signaling a potential end to the recent downtrend. The financial sector is presenting a more neutral picture today. The sector remained relatively flat, with a slight increase of 0.3% and a market capitalization change of $5 billion. Doji and bearish belt hold patterns are the most frequent, particularly in large-cap names, indicating indecision among investors. At 2:45 p.m., a doji candlestick formed on the 15-minute chart of a major investment bank, suggesting a potential pause in the current trend and possible reversal. Now let's take a closer look at the broader market sentiment and outlook. The cautious mood is palpable, with bullish signals concentrated and undervalued. It's economically sensitive sectors, while growth leaders and defensive stocks appear at risk of correction due to overextension. This environment favors patient accumulation in value sectors and selective caution, where technical signals point toward exhaustion. To summarize the key sector movements and patterns we've observed today, The energy sector, particularly in the mid and small cap space, is showing the most bullish signals with 23 bullish patterns and only 7 bearish ones, underscoring its undervalued status. Industrials, especially in the mid-cap segment, are also displaying strength with 16 bullish patterns versus 3 bearish ones, supporting the undervaluation thesis. The communications sector, focused on mid-caps, is showing promise with 11 bullish patterns and 4 bearish ones, indicating potential value opportunities. Healthcare, particularly in mid-cap medical devices and biotech, is presenting a positive picture with 14 bullish patterns and 5 bearish ones, suggesting continued accumulation potential. On the flip side, utilities, especially large-cap names, are flashing warning signs with 21 bearish patterns and only 9 bullish ones, highlighting overvaluation risks. The technology sector, particularly in large-cap software and hardware, is showing significant bearish sentiment with 31 bearish patterns and only 5 bullish ones, reinforcing overvaluation concerns. Lastly, the financial sector is presenting a more balanced picture with 4 bullish patterns and 9 bearish ones, suggesting fair valuation overall. As we wrap up our analysis for September 11, 2025, it's clear that the market is presenting a complex tapestry of opportunities and risks. The daily candlestick review spotlights energy, mid, small cap, and industrials as the most undervalued sectors, with high counts of bullish engulfing and hammer patterns driving technical buy signals. Conversely, utilities and large-cap tech stand out for an elevated number of bearish patterns, flagging risk of drawdown and sector overvaluation. This environment favors a strategic approach, with patient accumulation in value sectors and selective caution where technical signals point toward exhaustion. The daily candlesticks we've analyzed today provide a crucial read on evolving sector momentum, offering valuable insights for investors navigating these turbulent waters. Remember, in the world of investing, knowledge is power. By staying attuned to these candlestick signals and understanding their implications, you're better equipped to make informed decisions in today's dynamic market landscape. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment. Smash that like button. Subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.